Hey everyone, Douglas here, and welcome back to the MMT Macro Trader. So here's the thing, I'm going to dive right on into things tonight as there are some really interesting developments happening in the world of crypto right now. And my plan was to actually put together a very thorough video discussing everything that we're going to discuss tonight. But I think it might be a little too late if I wait any longer, as already Bitcoin and Ethereum both are starting to tank quite a lot, both down about 5% a piece. Bitcoin just shy of 5%, Ethereum down a little more than 5% tonight. And there's been a very concerning trend, development, if you will, in what seems to be one of the strongest drivers of the crypto world. And there's a correlation that had been there for the majority of Bitcoin's growth, and it is completely breaking down. And I think Bitcoin might be facing a Minsky moment of sorts in the not too distant future. So I'm going to do my best to try and get through everything that I wanted to cover that is necessary to understand what's happening. And then I'm going to link a lot of resources below where if you need to dive into any of the components we're going to talk about tonight in deeper detail to get a full grasp of everything, you can do that. But like I said, I want to get this video up as soon as possible, as I think in the maybe even as soon as this week or the coming weeks, we could see a quite a material breakdown in the price of Bitcoin. So if you're familiar with what Bitcoin is, how Bitcoin operates, how Tether is involved in the exchanges and the trading of Bitcoin, and you're also familiar with Minsky's work, his market instability hypothesis, and what a Minsky moment is, then I'll cut to the chase and just show you the data that I'm seeing that is of quite concern. And that is the development that since essentially July or August of earlier this year, we've seen a very strong breakdown in the rate of change of the market cap growth of Tether and the price of Bitcoin. And this correlation has been almost one-to-one, not quite one-to-one, but it's been very strong ever since Tether was created, and we saw that huge run-up in 2016 and 2017 in the price of Tether and the subsequent collapse, and then the kind of rise that we've seen again. And we've never seen this to this extent, this sort of dislodging, if you will, the correlation between Tether, again, the rate of change of Tether, market cap, and Bitcoin. And so that is my concern, and is oftentimes, and we'll piece all this together, is oftentimes an early indication that we might be having a Minsky moment. Again, we'll explain what that is in further detail in just a second. But again, if you're familiar with all those components and exactly what's happening, this is what I'm seeing. This is the breakdown that I'm seeing happening. And it could turn out, and I'll explain some ways this could turn out to be completely benign, but it could be very much a malignant tumor that could be doing a lot of damage in the coming weeks, months to the crypto world. So let's rebuild this kind of entire argument from the ground up if you're not familiar with all these components, and I will try and do my best to explain why it is that I think what I'm seeing here is quite a concern. So I'm going to assume you at least have some knowledge of what Bitcoin is, what Ethereum is. I won't go over that, but where I do need to start, or where this discussion is going to start, is with what Tether is. And I'll explain what's on the screen in just a second. But effectively, exchanges, so if you're gonna go trade Bitcoin, the exchanges you're going to trade them on, your major exchanges, aren't really keen to hold dollar assets. If they hold too many dollar assets, they have to face certain regulations. And so to make that easier, a stable coin is used as an intermediary function to trade Bitcoin. And that stable coin that holds the majority of the market cap for this purpose is Tether. And the idea behind Tether, the original idea behind Tether, was if you deposit $1 into Tether, a new Tether coin would be minted, and there would always be a one-to-one ratio between the dollars that Tether has on their balance sheet, on their asset balance, or on the asset side of the balance sheet, and the amount of Tether, so the liability they would have on the liability side. There would always be a one-to-one ratio. And it was very quickly discovered that, or at least very quickly assumed, that one-to-one ratio wasn't exactly happening. It especially came out during the build-up in 2017. There was a lot of speculation that what Tether was likely doing is just printing Tether into existence, which they certainly have the capability of doing, and then not backing them with any assets, or at least the one-to-one ratio of dollar assets. There's a great video from CoffeeZilla. I will link in the description below. It's half an hour long, but it goes into a ton of detail on the entire story behind exactly what Tether is and kind of the seedy underpinnings of exactly how it got to be what it is, and why there is a lot of speculation, and it's kind of a known secret that Tether is just a ticking time bomb in the crypto world. So I'll link that if you need more kind of background information on exactly why what you're seeing in front of you is very concerning, to at least to the point that we got here. So the original agreement was there would always be $1 for one Tether on the balance sheet of the Tether exchange, and then you could always redeem your dollar. Well, after 2017 and a lot of pressure from the public and just some math that didn't exactly add up, Tether came out and said, yep, you're right. We don't actually have a 1-to-1 ratio between dollar reserves and Tether tokens minted. We have a mixture of a handful of things, the majority of which on their balance sheet is commercial paper. And this is it. This is the extent. And in case you're wondering exactly, what else is on their balance sheet, can we dig any deeper? We can't. This is the extent of what Tether has released. And again, if you watch that video that I'll link below, it'll go into the shenanigans that were pulled to even kind of get this out, and the shenanigans that have been pulled to cover any deeper revealing of what's actually on their balance sheet. But the majority of their balance sheet is commercial paper. And other than that, we don't know. We don't know what is on their balance sheet. We don't know exactly what this commercial paper is touching. We don't know what sort of risk this commercial paper has. No one really knows. And there's never been an official audit done that is truly from a third party. They actually shut that down. They said it was too cumbersome to actually go through. So there's a very big concern that what is actually on the balance sheet of Tether, backing these Tether, is crap at best, and maybe even something worse. I have a Bloomberg article that I will also link down below if you want to read again some more kind of crazy stories on what could potentially be backing the Tether, what's on the asset side that is backing as the reserve for the Tether. My biggest concern here is that whatever is actually the reserve asset is somehow linked or systemically linked to the price of Bitcoin itself. And I'll kind of keep that in the back of your mind, because we'll come back to that in just a second. But regardless, what would happen if there is a run on the bank? So apparently they have some actual cash reserves, 10 billion or so in cash reserves on their balance sheet. So they could redeem the first 10 billion, but after that, then they have to start selling these assets, right? And if for whatever reason this commercial paper or any of these are actually just Bitcoin themselves, or one-to-one linked to Bitcoin somehow, in terms of the market, there's reason to believe that could be the case. Then what would end up happening is they'd have to force sell those assets if the cash redemptions just stopped. So keep that in mind. We're gonna hit that in just a second when we go to kind of understanding the dynamics a little bit further. But that's what Tether is. That's what the risk of Tether is, and that is kind of the how we've at least gotten to this point. The next thing that I want to talk about is the idea that we could be at a Minsky moment, and that will hopefully kind of wrap all this up, tie all this together, and make some more sense. So if you're unfamiliar with what a Minsky moment is, it was effectively you can read what I've highlighted here, but it's part of an overarching Minsky cycle of the business cycle, of the credit cycle, where the business cycle begins with very sound investment and then slowly but surely builds to more and more speculative investment. So you end up getting to this almost Ponzi scheme situation where what's actually keeping you solvent, the banking business solvent, is an increase in the price of the assets, because you get to this point where the cash flow from the assets is not offsetting the debt servicing cost. And again, what I've highlighted here pretty much explains it all. I'll read it. The debt leverage financing of the speculative investments exposes investors to a potential cash flow crisis, which may begin with a short period of modestly declining asset prices. In the event of a decline, the cash generated by assets is no longer sufficient to pay the debt used to acquire those assets. Losses on such speculative assets prompt the lenders to call in their loans. This rapidly rapidly amplifies a small decline into a collapse of the asset value, related to the degree of leverage in the market. Leverage investors are also forced to sell less speculative positions to cover their loans. In a severe situation, no buyers bid at prices recently quoted, fearing further declines. This starts a major sell-off, leading to a sudden precipitous collapse in market clearing asset prices, a sharp drop in market liquidity, and a severe demand for cash. So we've seen this play out. This is exactly what played out in the Great Financial Crisis, and to a lesser extent in the dot-com bubble as well. And the dynamics are very similar to what could be happening if, in fact, Tether is operating as some sort of money multiplier, reserve bank in the Bitcoin world, if you will. Now, the U.S. economy, the U.S. banking system is slightly different. It's an endogenous system, but nevertheless, the mechanics, the dynamics can still be very, very similar to how it all plays out. What's most important is a very subtle change in the level of both the asset price and then the move in the subsequent credit lending can cause the collapse to occur. And I want to show a chart here of the total private debt to the non-financial sector, so total private debt of the U.S., and overlay it with the stock market. Unfortunately, the Fred database only has the Wilshire 500 or 5,000 that goes back before 2011, so we'll have to use that as a proxy. But it essentially shows exactly what we need to do or what we need to demonstrate. So what I've done is I've overlaid the rate of change of private debt over the stock market, and before the 2001 dot-com bubble burst, you can see that the rate of change of private debt begins to dip lower, and likewise before the 2008 financial crisis, private debt begins to dip just slightly before the market tumbles, and it's that reduction in credit acceleration that is particularly harmful, a particularly kind of emerging sign of a market that is about to be in turmoil. And that is exactly what Minsky describes as the dynamic that you would expect leading up to a Minsky moment, which is why I'm quite concerned about the kind of disconnect, the sudden disconnect here between the market cap of Tether and the price of Bitcoin. My worry is that if in fact Tether is done propping up the price of Bitcoin and Bitcoin begins a very substantive fall off, that you're going to get that knock-on effect, right? That all of a sudden, for however it is that Tether creates more assets to create more Tether, that mechanism is done. And if that is the case, then you're going to get a run on the bank. And I mean, the market cap of Bitcoin is in the trillions, and so it's not going to take too much to overload the balance sheet of Tether as people try and get off. And then on top of that, you have these exchanges that obviously deal in Tether as well that are going to want to get out of the Tether world. And so you could see a complete ceasing of Tether and then a fire sale of every asset associated with anything that touches Tether, which is likely Bitcoin as well. So you could end up seeing Tether sell assets, which in some way could be linked to the crypto price itself, which would only push the crypto price lower, which would only perpetuate more selling. You get it. That's the Minsky cycle, pushing prices lower and lower. And again, we could be at that moment. Now, let me back up and give a slightly more benign way, a way this is not kind of an end of the crypto world scenario. It could just be that exchanges are slowly but surely getting off the Tether stablecoin. I don't know. It is. I mean, by design, it is built to be a system that is not transparent. There's no way to tell what's actually happening. I personally wouldn't bet on that being the case. But suffice to say, it could be that simple, and there could be just a break and maybe a bit of a price. A bit of a price resetting, and then things kind of go back to the way that they were. But I would be very concerned in this situation based on exactly what Tether is. How we know that Tether has propped up the price of Bitcoin and has the growth of Tether has shown to be very linked to the rise in Bitcoin, and that dynamic is breaking down is of quite concern. So that is, I think that is the essence of what it is that I want to get across and share tonight. And then we'll see how things play out. Certainly, I think the big takeaway that I would have at this point is be very careful if we continue to see Bitcoin, Ethereum, the major tokens that rely on Tether as an exchange. If they continue to fall, be very careful in that, in terms of not trying to catch a falling knife and that sort of thing, because we could see things really unravel if in fact there is this strong systemic link between Tether, the price of Bitcoin, and the overall crypto world. So I will wrap this video up here. Before I go though, if you are new here and you haven't yet hit that subscribe button, make sure and do that and turn that notification bell on as well, so you won't miss any updates going further. If you found this video particularly helpful, make sure you give it a thumbs up on your way out. Anyway, I'm going to wrap it up there. Good trading, everyone, and we'll talk to you next time. Bye-bye.